start making preparations for what is very likely to occur either by the end of this year or by the end of next year. You haven't got long.
Have I got a jewel for you guys today? I've just got back from Dubai where I was at an investment conference, gave a couple of keynotes on kind of geopolitics and other things I've recently specialized in. And I met Simon Hunt there, who's a hero of mine, a gentleman with extraordinary knowledge on macroeconomics, trends, investments, financial world. So incredible individual, a hero of mine. And here's the first of many interviews I did there with Simon Hunt. You will enjoy and you will be informed.
So Simon Hunt, a huge privilege to actually meet you in person and interview you here.
Well, it's been a pleasure to meet you and to see you here in this fabulous city called Dubai.
Yeah, stunning place. I was only briefly here in the past once or twice. But you know what? We might start off with just a brief kind of bio for the listeners who aren't aware of who you are and your extraordinary background and expertise.
Well, as a kid, I lived all over the world, in Burma, India, what was then Northern Rhodesia and Southern Rhodesia, now Zambia and Zimbabwe. And I spent 2 years at university in Belgium, probably spending more time on athletics and studying. And then my father said, that's enough of having fun, it's time you earned a living. So back to Northern Rhodesia, and I started working as a personal assistant to the chairman of one of the two big copper companies. Then moved to London to join the opposition Anglo-American Corporation, helped start up an international copper organization, went into the City of London, and then before I had any grey hairs, don't laugh, I started up a consultancy called Brooke Hunt and Associates, which got very large, and decided to be on my own. And in 1995, started up my current company, Simon Hunt Strategic Services. And what we do is we look at really where is the world economy going. Don't follow necessarily the consensus forecast. Dig deeper, dig beneath the numbers, look very carefully at the global political structure. Are there changes coming? And then in 1993, I started going to China, spending 2 to 3 months every year in China, and until about 2012, was actually visiting something like 80 different factories in 50 different towns and cities right across the large country of China. So I got here 3 years ago by accident into Dubai, where I now live and love it. So that's really my background and why, because of my travels around the world and in Asia, I found I have an ability of putting the dots together between what drives economic activity, as well as seeing the interface through geopolitics. The two are basically inseparable.
Absolutely, and unless you have an integrated view of both, you're really missing half the picture and you can make some very big mistakes, I think. And I've seen you on so many platforms discussing the kind of macroeconomic situation and predicting in as much as it's possible what may happen in the markets, etc. So we might start off more on the macroeconomic and market side. Naturally, we'll be bringing in geopolitics because it's so intricately linked.
Well, very simply, the world is sitting on the edge of a precipice. It is a world which is highly leveraged. Global debt, for every $1 growth in GDP last year required $3 of debt. And That doesn't exclude America. In the fourth quarter, for every $1 of GDP growth, it needed $2.50 of debt. And when you look at the way that the government in America just wants to continually print money, you know that something is going to break in the system. You can't go on having debt increasing at a faster pace than physical activity. So the big picture is that at some point, and I thought initially that we would have a big correction in equity and base metal markets, probably around April, May, followed by, which will coincide with the war in Europe and the war in the Middle East escalating to a level where people suddenly realize, gosh, these wars actually do affect markets. So how does the Fed react? And how do the other G7 central banks react? Print, 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 and drop interest rates. So then you will have 12 months or so of rising inflation. And when I say rising inflation, global inflation will be over 15%, probably American inflation around 13% by the middle of next year. What does that do to long bond yields? The bond vigilantes will hate it. So what we have on our work is US 10-year treasuries yielding over 10%. That's enough to crash the whole system. So that's our basic forecast, so that we will then, that'll be followed by something like 7 years of rolling recessions, you might call it depression, where you will have, civil war is a strong word, but very close to civil wars in some countries, certainly serious social strife. And by the early 2030s, we will probably see a physical war between the dying embers of one empire and the growth of a group of nations around BRICS. The group of nations around BRICS don't want a unipolar world, they want a multipolar world. And they don't want any one currency to dominate, because America has used its domination of the dollar as a weapon. So what you're first going to see is countries within the BRICS group of nations just using their own currencies, not using the dollar. I mean, for instance, last year, 95% of the trade between China and Russia was in their own currencies. 100% of the trade between India and Russia was in their own currencies. There's a new trade agreement between the UAE and India, 100% in their own currencies. This is what is going to multiply. Why do we need to go through the dollar? It just adds to your expenses. And America has a weapon through the dollar. So we're going to have, after 2025, 7 years of real hardship. I think you're going to see soaring energy prices, soaring food prices. You're actually probably going to see starvation in many parts of the world. And you're going to be entering a period, I think, where what does wealth mean? Wealth will actually mean, how do I survive? It doesn't necessarily mean you need millions of dollars. It means you need to barter goods. You need to have food in store. You need to have your own water supplies. You need to be self-contained in electricity. You need a nice parcel of land around you. So it's going to be a very difficult period. But the good news is that we will come out of it almost as though you've had an operation and you've cleansed yourself. The system's cleansed itself of all its ailments. So if you look at the long cycles that we have since 1900, they go through 40 years of strong growth followed by 40 years of weak growth. And we finished 40 years of weak growth in around 2020. We're now transiting into the new world of strong growth. But before we get there, we've got to go through these purges. So that's basically how I see things. However, there is an alternative scenario, which is because the financial system is so leveraged that any unexpected rise in interest rates could be enough to cause a financial panic, as everybody in the market seems to believe that we are going to see falling interest rates. That is probably not going to happen. So what we must be very wary of is that before the end of this year, what we thought might happen or would happen in mid-2025 could happen before the end of this year, i.e. the big crash, which leads to our 7 odd years of rolling recessions or depression.
Excellent summary, Simon, and I've learned so much from you and others in the past year. I'm kind of broadly familiar with the scenarios you're fleshing out there. Perhaps we could go into a little more detail on the numbers associated with those scenarios. So you mentioned the last one. If the crash per se comes this year, the S&P is now the S&P 5,000 because it's gone over 5,000. What kind of numbers could the broad S&P fall towards if there's a very significant crash event in this calendar year, maybe?
Well, I think the best that we can hope for is that the S&P falls to around the 3,000 level. However, in our scenario, is that we then would have an inflation-driven recovery, which would take the S&P probably doubling in price by the middle of 2025, i.e. 6,000-ish, that sort of level. And you see the same thing in base metal prices, having fallen to, say, the 6,500 level for copper. We're currently approaching 9,000. Then we would go up to close to 14,000. So that's our base case, but we're very wary that we could see the crash coming that we expected in mid-2025 to happen before the end of this year. In which case, I'm not going to say what the bottom of the S&P will be, but it will be a fraction of the 3,000.
Right. Okay. So that's essentially the worst case scenario based on everything that's going on, that you may have this bigger crash in 24 without the post-inflationary kind of rise. Yeah. That we kind of go past a certain checkpoint and go straight to the end game of the long recession or maybe depression. And gold, I guess, because something that a lot of people now are interested in, would gold behave like the 2,200 peak it recently hit? Might it go down just a smallish amount and then tend to go up over a long period because of the instability?
Yeah, I think gold has become too popular. So I would think there will be a small correction, $100, $150, no more. But central banks won't be selling, they will continue to buy. The buying will come from Asia, Middle East. And in particular, one should note what's been going on in China. In 2002, the Shanghai Gold Exchange was opened. And since then, Chinese households and institutions have bought around 23,000 tons, which they own physically. Just a few months ago, China's central bank, the PBOC, set up a system whereby Chinese households, using their accounts in the banks, to buy physical gold off the Shanghai Gold Exchange. So if you wanted to buy 10 ounces, it comes straight off your account into the Shanghai Gold Exchange, and you get 10 ounces of physical gold. But they've also set up a system whereby households can do it on a monthly installment basis. That's big, big, big. It's a big demand. So what we see happening is that the strong buying is coming out of China and the rest of Asia. Central banks in the fiat currencies don't like gold, will try to resist any big rise by selling. But the buying is coming from Asia and the Asian central banks and the Middle Eastern central banks. So, particularly with the dollar falling, with rising inflation and accidents in the financial system, Asia, Middle East, Africa, South America will want gold rather than paper. So what price does gold go to? I wouldn't like to say. But it's going to be a price in 5 years' time significantly higher than where we are today.
Yeah, so the traditional gold is a kind of a hedge. It's more a growth thing, likely now over 5 to 10 years.
It's even more than that. I see gold coming back into the monetary system through the BRICS group of nations. I suspect that within 2 to 3 years, China will announce our currency is backed by the gold which our citizens hold, which will be at least 23,000 tons. That ignores what China's various ministries own, which is a big multiple of what the central bank owns. I can quote as an example that the PLA, China's army, holds a very large tonnage of gold. I had a friend who actually knew one of the senior generals, went down to headquarters for drinks, was then walked across the compound to a big warehouse. And when the doors opened, as he said to me, my jaws dropped, because there, in the big warehouse, was gold stacked from floor to ceiling. So it's not just the PLA, it's probably most of the ministries own certain amounts of gold. How much? Friends of mine who've done the work since 1950 reckon it's probably something of the order of 25,000 tons on top of the 23 owned by China's citizens and institutions. So, and then if you look at Russia, Russia holds a far larger sum of gold than what the central bank does. From our information, at least 12,000 tons.
Just a brief interlude here. We're talking, of course, among many other things here about physical gold. I think it's absolutely compelling. A couple of years ago, I moved some of my family's kind of assets into physical gold, and I think it's actually crucial, as our conversation is indicating. So there's a link down below. I have a kind of a relationship with Pure Gold in the UK, one of the best businesses out there, and they have vaults all over the world, totally secure, or also will arrange shipment for you to look after matters yourself. So there's a year's free storage with the link I've provided below, completely up to you, but I would suggest you look into this pretty quickly. And now back to the interview with Simon.
And Russia's opening new mines in Siberia. Production is around 300 to 400 tons a year, just as China is. So I think gold over time is coming back as a monetary instrument. The G7, led by America, probably won't want to go down that route, but wealthy countries who own commodities will go down that route. And I suspect also that within 5 years, the BRICS group of nations will have expanded strongly to include many of the commodity producing countries in Africa and South America. So they will control the bulk of the supply of particularly base metals and energy. And then what will they sell their production for? It won't be dollars. Take Russia. There are rumors that they will link their price of gold, their production of oil to the number of ounces of gold. So the links just come back. Gold is coming back into the system.
Yeah. And well, really for 5,000 years, gold was money. It's real money.
Yep.
And there never was any other real money in the sense. It's all fiat, which always goes to zero. And you know, the funny thing is, there was a cartoon many years ago, I believe, long before these developments, and it showed the West and the US in a tennis court, and I know you like tennis, and the West is throwing blocks of gold across at China, and China and the BRICS are throwing across bundles of dollars, just showing what a farce it is, that real money is being amassed in the East, and the fiat junk is what America is wedded to.
Yeah.
This is, how can America not position itself in this gold-centric future? What's it doing to hedge and have its own gold in some new world? It's an open question.
Well, just to add to the currency complication, it's pretty obvious that at some point fairly soon, China is going to say, you want to export to us? We're going to pay for it in RMB, their currency. I think that the situation will reach a critical point. Washington knows that if they lose their dollar's hegemony, They're finished in their ability to control the world. So what does this mean? I think by 2030, it means war. I'm afraid that how do empires normally end? Other than Great Britain, who happily negotiated their way out of their empire, all other empires have ended by using what they thought was their last real resource, their ability to defeat the enemy. And I think that America will go down that route. I fear America will go down that route, and that by 2030, we will have a war.
Yes, essentially, hard to argue with that. And I know people watching, it's hard to imagine for modern generations, 3 generations since World War II, to think of more global war versus the skirmishes and the local Syrias and Ukraines and Iraqs. But it's a matter of the major power having no real choice. I mean, of course, America as a Western modern nation would not want to go to war with the horrific destruction. But as you said, history has proven there's no real choice at the end. You cannot just bow out, roll over, lose all your power as a country and have your whole nation not impoverished, but losing all of its wealth and lifestyle. I mean, the civilians are going to come after you. They won't tolerate the loss of your key position in the world. Is that kind of the way it is?
Yeah, I don't see any other solution. I mean, what we're seeing at the moment in Europe is now an open secret that NATO forces, special forces, have been operating in the Ukraine. So now it's an open secret. Russia is saying, okay, gloves are off. So what are they doing? They've been hitting NATO control and command centers, the CIA bases. And what's been NATO's response? They've lost the war, most certainly in the Ukraine. Are they going to have the last throw of the dice by taking the war directly to Russia? So we've seen recently attacks on Moscow, unsuccessful, minimum damage. We've seen attacks on oil refineries close to the border of Ukraine and other such targets. So I fear that we're going to see an escalation of the war in Europe and probably moving over Ukraine's boundaries. That's a big risk. And then if you look at what's going on in the Middle East, there's little doubt in my mind from what my friends tell me that Israel is fighting for its very survival as a sovereign state. So all the evidence is pointing towards Israel mounting a full-scale attack against Hezbollah, which means Lebanon and Syria. Does Israel have the firepower and ability to defeat Hezbollah on its own, when Hezbollah has, some say, as many as 75,000 precision ballistic missiles? Probably not. So does that mean that the two founders of Israel, UK through the Balfour Declaration in 1917, supported then by America, will they go to the support, either overtly or covertly, with Israel? Probably. What is the real reason for America to build an amphibious corridor from the sea onto the Gaza Strip? Don't tell me that was to bring food in. They could easily have done that from Tel Aviv, from the airport, driving it down into, but no. It's probably an excuse or a reason to bring, should the decision be made to support Israel in their battle against Hezbollah, another ability for America to bring troops and equipment into Israel through that new amphibious corridor. But if you get an expansion of this, if you get a full-scale attack against Hezbollah, then that means Lebanon and Syria. And then you've got the treaty between Syria and Russia, which means that Russia will come into the equation. If Russia comes into the equation, will Iran come into the equation? We know from listening to senior retired IDF and Mossad officials that the head of the snake is Iran. It says so many times. It says so guys in Congress in Washington say it. So there's another, whilst the Pentagon may not like to have an attack on Iran, the politicians certainly do. So the risk of an attack on Iran within the next 2 to 3 years is a very high one. Problem is, Iran has developed a huge arsenal of missiles, including hypersonic missiles. They've already made contingency plans for an attack, which includes mining the seabed in the Straits of Hormuz so they can blow it up with the press of a button. If that happens, 20% of the world's oil supply goes through the Straits. What does that do to energy prices? More importantly, what does it do to the global derivative market? It explodes. And then you can say, game, set, and match to BRICS.
Yeah, absolutely. And we probably don't have time to get into the great taking and David Webb, but when you just mentioned there, implosion of derivatives market, that's one of the kind of pieces on the road to the great taking infrastructure possibly triggering. So, and at that stage, yeah, all bets are off, I guess. So, just going back then to the kind of financial, we've kind of covered what will likely happen gold, what will likely happen the S&P.
And other all equity markets.
Thank you, Simon. All equity markets.
Yeah.
I mean, is there any asset class that will tend to be robust through this major seismic shift? Possibly land of certain sorts, but not commercial real estate, but
no, I think land, what do you need to survive in this environment? Food, water, electricity. So you have your own electricity generators, you stockpile food. If you've got land, you can have cattle or sheep or whatever on it. You want your own water supply. If you're near the sea, you can have a desalination plant. There are these new mini models. And for electricity, you have your own generators.
And in fairness, it's not indefinite, but diesel is a safe storage fuel, even for individuals. You know, many thousands of liters, there's no problem in a big tank. It's not like gasoline. And that can supply heat and also, as you say, electricity through a generator. Highly efficient modern models.
Yeah.
Now, to some people watching, this will feel feel a little like encroaching on the kind of doomer or prepper. So, you know, people will think it sounds a bit conspiracy theorish, but I think you've put it very well. People, they think because 70 or 80 years have passed since World War II, you know, they think, yeah, but all that stuff is in the past. This kind of thing is in the past. But what they don't realize, and I think an extraordinary naivety, they think because they've all got iPhones and other nice tech stuff, and everyone's all nice and Western and trans and all this kind of diversity, inclusion, everything's nice. They don't realize we're in a pocket in history of that kind of stuff. And it always changes and goes in cycles. It has forever, right? What do you reckon?
Well, you've got these cycles all converging now, whether it be the 20-year cycle, the 40-year cycle, the congratulate cycle. They're all converging.
So
And the only question is, in our minds, is it going to be this year or is it going to be in the middle of next year? And our base case is it's the middle of next year, but I'm watching developments very carefully because it could well be brought forward to this year.
yes, and that's a relative.
Fragility of the financial system is not recognized by most people. It's fragile.
Yeah, and I look at mainstream kind of financial news, and I just look and I'm just astonished that there's no acknowledgement of anything you're talking about, really. Yes, they touch on it as a headwind for the market, but in such a trivial way compared to what will happen. And as you said there, your base case, yes, is to have a nasty little correction in 24, and then the Fed flooding the liquidity, etc., and then an inflationary rise of the S&P, etc., up to new heights, and then 25, everything comes down hard for the long term.
Yep.
But the new, kind of potentially could become the base case, is more like the big one in mid-24 and then the long road. And is that, in your mind, a 50-50?
I think 50-50 is the best way of putting it. It's just, we just have to watch very carefully how events play out over the next 2 to 3 months.
Okay.
Because that will tell us if the Fed, which some of my friends say is quite possible, that the Fed, instead of dropping rates, first raises them, the market will be so shocked. Look what's happening to the inflation numbers. Look what's happening to the CPI services number. Shooting up. Inflation has not been defeated, and I think the Fed knows it, and that's why I suspect that the Fed is going to shock markets by increasing rates. Because really what they've been saying all along, we have got to bring CPI down to 2%. No way is it going to go down to 2% without a deep recession or a crash.
Yeah, an increase. And even the CPI index that you mentioned, I know you're a good pal with Adam Taggart. And as he says, the CPI, he may have taken it from someone else.
Well, I know who he took it from. Danielle Martina Booth.
Yes.
She made a super comment. She said, we all say that China's data is nasty, but I'm paraphrasing, but I can tell you America's is even nastier.
Yeah, and that goes for the employment and everything.
I mean, if you go back to John Williams of Shadow Government Stats, the superb work taking inflation and employment data back to the 1970s, when Arthur Burns started to manipulate the data because he didn't want to raise rates, when he saw what was actually happening to the inflation data. So John takes these, both the inflation numbers and the employment numbers, back to before they were manipulated. And you've now got, on his work, you've got inflation. I think the last number I saw was 10.8%. CPI, the real CPI is 10.8%. And the real unemployment, 25%. Why was the labor market so tight?
Yeah. And I see they had another go at Trump just this morning. I saw on the news feed the usual legacy media, and are absolutely ridiculing him for talking about double-digit inflation and all these admittedly populist things to say. But the numbers he said and the future numbers how bad it could get, and everything else they ridiculed him for in that report was largely...
Well, the average household knows.
Yeah.
Come on.
Yeah.
I mean, there is a firm called the Chatwood Survey, which is done twice a year. They survey 500 items that households buy all the time, over 50 towns and cities, twice a year. The last number that came out for the first half of last year, over 10%.
10%.
So you come, just marries up.
Yeah.
What is the real number?
And does that one, just offhand, is that very much consumer goods, or do they incorporate to an extent kind of energy and gas bills on the other?
It's what the household buys every month.
Including energy?
Yeah, everything.
Perfect. So there you are. The double digit is just a reality. Well, you know what? I know we have not indefinite time, Simon. I want to respect your time. But to close, perhaps, your last thoughts in general for the average person out there. And I'm guessing it's like kind of, it's not a time to get into the stock market, even if there is a false dawn over the next year. You know, for the average person, maybe, I don't know, metals are a refuge in the long term, particularly gold, I guess. But anyway, I won't go on. I'll let you talk for the average person.
Well, I think my advice is take profits, hold cash, in whatever currency you feel comfortable with. Start stocking up on cans of food. Start making preparations for what is very likely to occur either by the end of this year or by the end of next year. You haven't got long, so do it on a monthly basis. Keep your diesel tanks topped up all the time because energy prices are going to rise. So don't let your diesel tank go to half empty and then have to fill it up at a higher price. So that's basically what I would be doing.
Perfect common sense approaches given the geopolitical reality which you so well articulated. Thank you so much, Simon.
My pleasure. And if anybody wants to get in touch with me, my website is simon-hunt.com.
simon-hunt.com. Perfect. I'll put it on the screen, and I'll actually put it on from around 10 seconds back because I should have mentioned it. And you have a
Well, I didn't forget.
Of course not. You are so on the ball. Your newsletter, though, is growing in popularity. It's a superb newsletter. You haven't been too long with
1 year.
1 year. So your newsletter, for anyone listening, is going...
Which is twice a month.
Twice a month, and going to keep you absolutely informed in everything in the geopolitical sphere, the macroeconomic, microeconomic, everything.
Yep.
Thank you, Simon.
My pleasure. Thank you for having me on board.
No, the pleasure is all mine. Thanks.
So that'll do it, folks. A fascinating conversation. And yes, it airs towards the kind of doomer or prepper kind of scenarios a little. But I think, as I kind of pointed out and Simon clarified, we've got to be realists about the way the world is going. And we have had 50 or 60, 70 years post World War II where things have been extraordinarily nice and all ESG and kind of stuff like that. So that's all very well and good, but fundamentally humanity has not changed, And fundamentally, we're entering a cycle where things could be very different. Hopefully not. So I hope you found that very informative. Some great tips there as to how the average person can start shifting their behavior slightly and beginning to prepare for what potentially may be a very difficult period. So hope you enjoyed it, and as I mentioned in the interlude, a link down below if you want to cover the kind of physical metal aspect of your security going into the future. Completely up to you. There's no advice here, but there is a link with a year's free storage if you want to explore that, I must say, crucial area. And if you have the means or assets that you can deploy some into a hedged or safety kind of measure. And I would expect, but who knows, that in the coming years, certainly the 5 to 7 year horizon, those assets will become quite pivotal and crucial. And you can't say you didn't hear about it, right?